Not all salary packaging arrangements are equal. There is a big difference with the salary packaging offered to not-for-profit employees as opposed to the salary packaging available to standard organisations and their employees. As an employee of a not-for-profit, you generally have a wider array of salary packaging options and, here's the real kicker, no fringe benefits tax implications. So if you're part of the roughly 10% of the Australian workforce that is employed by a not-for-profit, then you should really consider using this entitlement. It's almost a no-brainer. So firstly, how does salary packaging work? Well, under a salary packaging arrangement, you forego part of your income in return for a benefit. The advantage of doing this is that you are foregoing your gross income, that is your pre-tax income, to pay for a benefit that you otherwise would have had to pay for using your after-tax income. The saving you make is effectively equal or equivalent to your marginal tax rate, which can be as high as 47 cents in the dollar when you include the Medicare levy. Just to reiterate, this only applies to not-for-profit employees. As an employee for a standard organisation, you may be able to salary package items, but you will incur fringe benefits tax implications. The FBT could render the salary packaging arrangement a worthless exercise. In addition, you won't have the option to salary package the same items you do as a not-for-profit organisation. The amount you can salary package is subject to a capping threshold and will vary depending on which not-for-profit organisation you work for. Typically, you'll be able to salary package either $9,010 per year or $15,900 per year. Now, when I say year, that refers to the fringe benefits tax year, which runs from the 1st of April to the 31st of March. Your employer will be able to tell you the limit that applies to you. Once you know the limit, there are numerous expenses you can salary package. This includes rent, mortgage repayments, school fees, credit card repayments, or general living expenses such as groceries, fuel, and bills. If you aren't packaging an ongoing expense such as mortgage repayment, which generally will go directly into the loan, then the expense items will typically be paid via a salary packaging debit card. This is essentially a debit card that gets topped up by your employer each pay period with pre-tax income. You use it to pay for your eligible bills. There are restrictions on withdrawing cash from this card, so be mindful of that. In addition to the cap limit applied to the items already discussed, there is a separate cap limit of $2,650 available for meal and entertainment benefits. This includes expenses like restaurants, cafes, and holiday accommodation. It doesn't include standard living costs like groceries and liquor. If you choose to use this benefit, you will get a second debit card for your meal and entertainment expenses. One of the key implications to consider when salary packaging is that an amount known as a reportable fringe benefits will be recorded on your PAYG payment summary. This represents the grossed up value of your salary packaging benefit. In other words, it works out how much income you'd have to earn before tax, assuming you were on the top marginal tax bracket. The formula used to calculate your reportable fringe benefits is your total taxable value of the fringe benefit divided by 1 minus the FBT rate. And now the FBT rate is the top marginal tax rate, including Medicare levy, which in the current and the 2024-25 financial year is 47%. You do not need to do this calculation. Your employer does it for you. Your reportable fringe benefits needs to be declared when you lodge your tax return and can have an impact on a number of items. For instance, reportable fringe benefits are factored into many Centrelink calculations and can impact your entitlement. Also, if you have a help debt, mandatory payments are based on your taxable income plus your reportable fringe benefits. Given this, repayments will be higher under a salary packaging arrangement. It is important you understand the implications of reportable fringe benefits prior to establishing a salary packaging arrangement. Now that we understand what can be salary packaged and how much, let's look at a real-life example of how this may work. Mark is a public ambulance officer and his salary packaging limit is $9,010. His gross annual salary is $150,000 and he plans to package the maximum amount of living expenses and meal and entertainment. This table compares the outcome for Mark with and without salary packaging. Now, please note the tax rates used in this example are for the 2024-25 financial year. As you can see, by salary packaging, Mark is effectively $4,547 per year better off, which is a pretty good outcome. As a side note, you may have noticed that we haven't talked about salary sacrifice to superannuation, and that is because it's not considered a fringe benefit. Every employee has the opportunity to salary sacrifice to super, and it makes no difference if you work for a not-for-profit. Salary sacrifice to super is a great additional step you can make on top of these concessions, and something that you should consider. In summary, if you work for a not-for-profit, then you should definitely consider salary packaging up to your allowable limit. It is a way to pay for your everyday expenses from pre-tax income, which can be a massive bonus. However, this comes with a warning. Be mindful of reportable fringe benefits implications and don't spend more than you otherwise would have simply because it's salary packaged. This is not an invitation to boost your living costs. If you think salary packaging is an appropriate strategy for you, we strongly recommend you speak with your financial advisor. They can help assess the appropriateness for your particular situation. Please note, the information contained in this video is general in nature only and does not take into consideration your objectives, financial situation, or needs. As legislation is constantly changing, the accuracy of this information is only current as at the time of recording. Before relying on the information, you should check to see if there have been any changes.